Barclays is going to hire Jes Staley, an American investment banker, as its new chief executive, if regulators approve. This is logical in one sense. Barclays has a big US-leaning investment bank it needs to fix. A boss who understands that business, in contrast to former head Anthony Jenkins, will help. But the arrival of Mr. Staley raises a big question. Is he going to put more money into the investment bank or continue what Mr. Jenkins started and take costs and capital out of it? The second option is superior. In the first half, Barclays' investment banking division had a cost-to-income ratio of 66%, had a return on equity of over 10%, and employed 31% of the group's risk-weighted assets to generate 35% of its profits. Not bad. But remember, investment banking results are volatile, and last year's results, for example, were awful, including a 2.7% return on equity. First half results tend to be stronger than second. And with the crisis 7 years gone and the US and UK economies relatively resurgent, this should be the sweet spot for Barclays Investment Bank. A 10% ROE just isn't that sweet. Barclays is, in other words, a long way from proving that its investment bank can earn back its cost of capital across the cycle. But what to do with the investment bank is not, in fact, the biggest dilemma Mr. Staley faces. That is what to do about the misbegotten hybrid that is Barclays Group structure. It is a US investment bank, a UK one, a UK retail bank, a credit card issuer, and an African bank. No one has ever made a convincing case that the benefit of having these units together outweigh the considerable costs in complexity, in regulation, and in investor confusion. Barclays trades at 0.8 times its book value. The chance that it will close the gap in its current form is slim. The conventional view is that an investment bank cannot function without the cheap funding costs of retail operations. But the ring fencing of UK retail banks weakens that argument. Time to be aggressive. Most investment bankers receive a handsome fee for advising on a corporate breakup. Mr. Staley will only earn himself a job running a much smaller company and the gratitude of his investors.